te llamo para que vayas a recoger las paelleras. Y me acuesto en ya para abrir el restaurante que era el arroz. Y me llama el cocinero. Risita, ¿qué? Ve por la paellera. Venga, que las 2 de la tarde ya están aquí. Miren, bañador, en las chanclas. Todo despeinado porque no me dio tiempo nada ponerme las chanclas y el bañador. Voy a la playa, había subido la marea. ¿Y tú? ¿Y tú? Había subido la marea y encontré una paella.
How's it going, everyone? Mario here. Let's take a moment to laugh at all the bears for a second. Alright. You know what? Let's do it again. Okay, that's enough. One last time. The only thing that crashed last week was the P&L of people who were betting against the trend. Nice way to close the first quarter. As a trader, focusing on the price and the trend makes you the smart money. You cannot trade short term by following macros and narratives, simple as that. It offers no value whatsoever, especially if you're a day trader or a short-term trader who mainly trades equities. Oh Mario, but I trade news and I make money and I have a win rate of 1,000,000%. Here's your medal. Congrats. Last week we had 408 as a pivot to the upside and 388 as a pivot to the downside. They closed above 408 pretty comfortably. QQQ was up like 20% in the last 3 months. SPY was up around 5%. The question is, where to from here? If you're trading actively, you must have seen this term floating around. April is the most bullish month for the stock market. When you see either side getting too overconfident and cocky, you know something is up. Before you get into this, this is bullish, this is bearish argument with anyone, go ahead and check out the monthly charts. Is it looking bullish to you or is it looking bearish to you? All I see is just a range-bound chop with no direction whatsoever. Until it changes, there's no point in arguing about anything. If they can't scare you out, they're most likely going to wear you out. That's exactly what's going on. It doesn't have to be bullish, it doesn't have to be bearish, they can just trade sideways forever until market figures out a direction. So the point is, don't get too cocky with being bullish or don't get too cocky with being bearish either. It's not a necessity for the market to outright crash to like 60% downside, or it's not a necessity for the market to make a new all-time highs this year either. They can just chop around with no direction whatsoever to frustrate a lot of traders. If you focus too much on what's going to happen the next day, you're most likely going to lose sight on what's been happening for the past few months. What's been happening for the past few months is market has just been trading in a particular tight range. I hope you don't lose sight of that. But during dot-com crash and financial crises, market rallied all the way to all-time highs before making new lows. Okay, what's your point? So you're gonna stay short all the way until the market hits a new all-time highs, and once it reverses back from the all-time highs, you're gonna say I told you so? Being early on a trade or being early on a call out is being wrong. Simple as that. Now back to the technicals. They close comfortably above the all-time highs Avwap and SPY. But if you've been following me for quite some time, you should know we don't consider Avwaps as support or resistance levels. It's the slope of them that matters the most. Volatility has contracted as well, so the range is expected to be a bit narrowed when it comes to SPY until proven otherwise. So leading into next week, after a big move like this, gaps after gaps, consolidation or a small drawdown to backtest and important levels won't surprise me at all. But if they do keep melting higher and higher, I'm okay with it as well, as bulls have the edge here. Something to note, just because I'm expecting a consolidation or a small drawdown doesn't mean I'm shorting the tape or shorting the price action for pennies and cents right over here. I got a certain set of rules which I won't divert from. Not shorting stocks with a positively sloping 5-day moving average is one of them. A potential melt-up scenario will be them consolidating here until the 5-day moving averages catch up to the price. and then before making the final push towards this 416 zone. This will be the bull case. Now, if they do start selling off from here around this 410.50 zone and start losing this 5-day moving average and continue to sell off, we will start getting cautious and start looking for bearish positions with the proper stop losses on. If you're a new trader and you just saw April is the most bullish month for the stock market, it's seasonality, and seasonality is just that. You can't base your trades based off of that factor alone. Focus on the price, because at the end of the day, price is the only thing that pays. The trend is to the upside, and if the seasonality favors the bulls and if they keep pushing higher, we can just stay on the trend. But if the trend reverses and they start pushing down, you can't just buy calls blindly and say seasonally April is the most bullish month for the stock market and then keep taking losses when the market is going against you. I also saw a lot of opinion pieces or a lot of conversation about, oh, are we in a bull market or are we still in a bear market? All these types of conversations offers little to no value at all. One side will say, oh, this is just a bear market rally. The other side will say, oh, we are entering a new bull market. What are you getting out of it? Nothing at all. By the time you realize that you were wrong, that you are in a bull market, you would have already missed out on 20 to 25% move to the upside like you just did right now if you're a bear in particular. Following the trend and following the price tells you what you need to know rather than trying to label every single thing which market does. So leading into next week, I'm not expecting much from SPY. As I mentioned before, I'm expecting more of an inside week, which means I'm expecting the price to stay between the highs and lows of the last week's candle. The pivots which I got leading into next week is 416 to 418 to the upside and 398 to 400 to the downside. This is the range which I'll be keeping an eye out for. So to summarize, leading into next week, I won't be surprised if we have some sort of pullback to back to some important levels in SPY. If they do pull back, I'll be keeping an eye out for that all-time highs Avwap, which is currently sitting at 407.33 and change. Volatility has contracted big time as well, so expect some boring days ahead. By consolidating, the price gives room to this 5-day moving average to catch up towards this 405, 406 levels. Depends on how the price reacts around this area. We will take trades accordingly. When it comes to QQQ, last week we spoke about how there is a potential reckoning waiting to happen to all the short, and boy did they get squeezed. Similar to SPY, I won't be surprised to see some sort of consolidation or a drawdown to run a test to important areas. We are above this all-time highs Avwap as well, which is currently sitting at $315. A pullback or some consolidation towards this area won't be surprising after a big move, but similar to SPY, above the positively sloping 5-day moving average, above the all-time highs Avwap, innocent until proven guilty. Consolidation will bring the 5-day moving average towards the price before the next push towards this 329 to 335 up north will be the potential bull case. As we spoke about in SPY, if they start losing this 5-day moving average, we can start looking for bearish positions with proper stop losses on. Until then, hey, keep feeding the narratives. Last week, we took two massive trades, one on JD, the other one is with Monster. I still have the open position on Monster, by the way. Oh, you shouldn't swing anything with this market. Well, it depends on the stock. We went long on JD last Wednesday at $41 with stop losses at $40.50. When the market opened on Thursday, this capped up to $44, a beautiful $3 bounce from the entry. In, out, hello, goodbye sort of trade. As I mentioned earlier, I'm still holding some runners with Monster. I want to reiterate the metaphor which one of my friends gave for trading. It is like hunting. You gotta wait for certain things to play out before establishing an entry with proper stop losses on. This stock made me wait for 5 months. Has been consolidating for almost 5 months with no movements whatsoever, and they finally broke out. We went long on this at the opening print on Friday, still holding some runners in it. If they come back to run a test to this Avwap and if they find strength around these levels, I will position myself, add more contracts with the stop losses at $52.77. This is one of the best setups I have got in my watch list, and the risk on this is MNST being a false breakout. Well, if that's the case, we can cut it for a small loss and move on with other trades. If not, if this is a breakaway gap, this has potential to move further higher. If you want to get real-time updates on trades like this, go ahead, join the Patreon. I know most of you work 9 to 5. I know most of you can't day trade most of the time. So let's swing together. pause. That being said, take high probability trades, manage the risk wisely. I'll see you guys in the next video.